Welcome to the FinTech Times Presents series of webinars. Established in 2016, the FinTech Times is a global multimedia news outlet centered around the world's first leading FinTech newspaper. We report on the latest and brightest ideas from the FinTech world. So firstly, I'd like to say hello to our online audience. Thank you very much for joining us. Today, we're going to be talking about data is the new air, and without which companies cannot survive. We'd really like it if you could follow the conversation using the hashtag FinTech Times Data is New Air and follow us at the FinTech Times. We've got a great group of people for our discussion today, and what we're going to be looking at is the advancement of data use within key sectors, financial services and insurance. The webinar is going to explore the when and how of data becoming so valuable, how data is really used to innovate new products and services. And also we're going to touch on the future of how data will continue to be valuable, but maybe some of the security and the fraud invited in that. So thank you all for joining me. What I was going to do first of all is just go around the panel and ask you to give us a quick introduction to yourself. Perhaps Rupa, you could kick us off and give us a short introduction.
Sure. Good morning, good evening, good afternoon, everyone. Thanks for joining in. I'm Rupa. I currently head digital distribution for Chubb Insurance here in the region in APAC. Been in insurance, reinsurance industry for the last 12 years across risk management as well as product development. And yeah, I'm keen to discuss on a very relevant topic with everyone here.
Wonderful, thank you very much. And Adrian, perhaps come to you for a quick introduction.
Yeah, well, thank you very much, Mark. So Adrian Chung, I'm the CEO of GoBear. We are a financial services and data platform. We have around 200 over employees across 7 countries here in Southeast Asia and Hong Kong. And our role here is to help consumers and financial institutions search, match, and transact.
Wonderful.
And for us, data is the key to everything that we do.
I'm looking forward to hearing a bit more about that. And last but not least, Karan, could you please give us a quick introduction?
Thanks, Mike. Hi, everyone. Karan Jain. I'm Head of Technology for Europe and Americas for Westpac. I've had the privilege of being both an entrepreneur and a corporate guy over the past 15, 20 years. So, and data's always been important. Now we're catching on to it more and more. So look forward to having the discussion.
Wonderful. So obviously the other thing to point out to our audience is that we are obviously taking questions as well. There's a Q&A button at the bottom of your screen if you're joining us from the Zoom app. So please put your questions to the panel. We'll try and answer them as we go through and also have a little bit of time at the end to do that as well. So what I was going to say, just to sort of try and kick us off, I was just going to go around the panel and really sort of start with the sort of the concept of, can you recall a time when you first realized when data was so valuable and why it was so valuable? And maybe sort of keeping to the same sort of routine, but we'll start with Rupert. Can you remember the time when data was so valuable, or you first realized that?
Yeah, I think, yeah, it's an understatement to say that data has never been important. I think data right from the start has been very, very critical. I think it's just the quantum of data that has started generating in the last few years that has just made its presence all the more important. And if I could kind of pinpoint more broadly from industry point of view, I think it's just the adoption of the technology around mobile as well as cloud computing that has really changed the game. But one pivotal point I do remember a few years back was actually the lack of data that kind of triggered this feeling of that why data is so important. We were looking into at that point in time into the field of flood modeling in Asia, and then we had very little data, and every question and every perspective was that it's not a risk worth even underwriting for insurance companies. And it actually triggered from the fact that it's not the case. It's just that we didn't have the right data, which we would otherwise had. So that's kind of one thing I can think of is probably the lack of data kind of triggered that. It's so important that you can't even operate a successful, a good business and actually underwrite as a proper insurer for you to continue. But but yeah, we'll talk more about how it has a lot has changed as well on that landscape.
Yeah. Okay. And maybe Karen, coming to you, sort of thinking about sort of trends in data from past. When for you did this sort of things really become so obvious that data was intrinsic to everything?
I felt like telling the story back in the 1980s where we all had a floppy drive. Look, I think in agreement with Rupa, when cloud computing kicked in, or even just the compute power, both on the infrastructure side as well as on the application side, I think that was a real turn in the pivotal change in the industry in financial services, because now you had the capability to go, okay, well, I can actually do a lot more than I'm doing today. But then it was like, okay, well, I don't know what I don't know. So I've got all this data that I've been collecting, because as humans, we're really bad at, well, we're really good at collecting data, but we're not really good at collecting the data that matters. So, yeah. And that comes to the point of lack of data. It's not like we haven't got data. We've got heaps of data. It's what data is actually useful. So I think it's almost, you know, we had the wave of big data, and now we're going through the, you know, went through the wave of machine learning and AI in the last couple of years. But I think we're still scratching the surface of big data in my mind.
Yeah, interesting. Adrian, sort of coming to you, obviously, what one would imagine that obviously GoBear comparison site, obviously data is intrinsic to your business model. When for you did sort of data really sort of start taking that really pivotal point?
Well, I think for me, it actually happened before I even joined GoBear. So I used to run a jobs portal called JobsDB, which is a marketplace. We had 1,000 people across Southeast Asia and Hong Kong and China. And this is almost a decade ago. And in that, we saw data being very useful to try and help consumers, job seekers and employers find each other, right? It was, they couldn't find each other. And it helped us make the marketplace more efficient. But we began to see that, hey, I could even influence how job seekers look for jobs through the emails and things like that. And then before I joined GoBear, I co-founded a big data credit scoring startup called CreditLab. And that's when I saw the power of the fact that consumers are all online, and specifically on mobile and smartphones. And that created a brand new set of data that didn't exist before, which helps you describe how people behave. And so when I joined GoBear, it's now not only using consumer behavior to to help improve conversion or email openings or people to apply for jobs. We're now using different types of data to actually fundamentally assess and price risk in financial services. And that is the key aspect of financial services, is all about risk, because good people pay for bad people, in summary. And so that's what for us has been amazing, is now there's even more data which is better and more predictive in risk outcomes than didn't exist even 9 years ago. And for the reasons that Rupa and Karan talked about. I mean, we just have computing power and cloud and a whole bunch of things that were not possible when I was running a tech company 9-10 years ago.
Yeah, it's interesting that you sort of say that. We've been advertising this webinar on LinkedIn, and one of our influencer friends, David Parker, actually put a comment up saying, "You're saying data is the new air, but actually that's not true." So because the thing with data is you can have bad data and good data. And bad data is absolutely useless, but good data is absolutely priceless. He said, so it's not like air where actually you can't have good air and bad air, and one will keep you alive and one won't. It's very much more about that. So that's kind of touching on that sort of concept that Adrian sort of brought as well. Rupa, what is that something within sort of like the insurance industry? Does that sort of ring true? Sort of, as you were saying before, it was a lack of data that really sort of made you realize what you needed. And I guess from a risk perspective, there's good data and bad data. And how do you sort of go about understanding what ones you want and what ones you don't?
Yeah, I think we're still, as an industry, as insurance as an industry, I think we're still far behind, I would say, than a lot other industries in having access to all of that data. because I think if you look at insurance, right, it has very limited touch points with customers on its own basis. It's more on when the customers probably buys, claims, and a bit of engagement in between if insurers really want. So one of the things I think for us as an industry, I think that we really haven't come to that point where we have so much data that we are trying to figure out what to do with it, if I'm honest. I think, but yes, what does happen is that as we are progressing, especially on the consumer side of insurance, we are seeing quite a bit of behavior that e-commerce also uses for various purposes on pricing, etc. I think where we are realizing is that not every data contributes to the same in terms of the risk we are actually trying to price. So it doesn't become a bad data, but it's a irrelevant data, I think so. That filtering process is more around what will actually drive the output you are looking at, be it around I'm doing a claims efficiency or be it around me acquiring the right customer. So just to elaborate a bit on that would be that, for example, should I just look at someone to say that you are a millennial and in so and so you're from that particular background? Is that enough, or do I need more variables to really offer the product? So I think that filtering is probably more where we've seen is critical at this stage for us.
Okay.
I
was going to say, Karen.
Yeah, as you said. So while I work in investment banking, I've done a tenure in the insurance industry, right? And and we used to collect a lot of data from the actuaries team, right? And go pretty hard in terms of working out models. And if you still talking to many short tech companies today, and in my, of course you're closer to it, but the shift I've seen is people starting to use data like geotagging, right? So while everyone's got a phone, everyone's got a location, the data gets anonymized and gets shared, right? And that's a huge valuable insight that didn't exist before in terms of what the actual person is doing, how they're using if it's a device insurance, or if it's a car insurance, or if it's a house insurance. So I think filtering is critical, but we've got so much different data sets. Classes that we didn't have before, and I think we're still working out how to use it.
I think so. Adrian, coming to you a little bit. Obviously, you GoBear covers sort of both financial institutions and insurance institutions with this sort of comparison site. So presumably the sort of the opening up of data and the making data more available has been quite a key thing to sort of developing the GoBear business itself.
That, and also finding, I guess, sophisticated partners such as Chubb, who we have a regional partnership with. But I mean, I'll just give you one example about how we use data for the benefit of the industry, both the consumer and the partner. So we would know, for example, as a supermarket in aggregate, that if somebody was traveling from Singapore to Thailand, right, versus Singapore to Japan, that maybe the lost luggage claim limit is $1,000. And maybe on average the industry is offering $2,000, but people only want $1,000 to Thailand, and so it's a mispriced, misspec product because the insurer is taking on more risk and charging for it. So we as GoBear can highlight that 38% of consumers are looking for something that is less risk. So reduce your risk limit and therefore charge less. And therefore you will also sell more. So rather than getting this kind of like barbell where people underinsure or overinsure and you lose that gap in between, as an industry, we then create or co-create, an example with Chubb, a policy that then works for everybody, managing that risk aspect. And then we see average order values increase by 50-odd%. So that's an example versus, hey, you go to Japan, people want more medical coverage versus less, and you can actually take on more risk and price for that and still meet what the consumer needs. So this is just an example of behavioral other data that we never existed before, and as an industry you can't actually improve both the consumer and industry outcome. So I think these are just examples of simple bits of data, and of course when you add machine learning and you add automation to that, then we can move much closer to a personalization of risk and product for consumers. I don't think we're there yet, but this is the kind of foundation that you can use data and risk pricing for.
Yeah. And obviously what we're talking about here is actually not sort of necessarily personal data anyway. It's not, we're not talking about knowing, you know, someone's financial history or anything like this. What we're talking about is actually just a tool that brings all the different indices and data sets together into one place. And I was sort of thinking again about the sort of banking industry and the insurance industry. I guess a lot of that data was within even companies was set in silos for a long period of time, you know, and although you know the data was there was no way to actually extract it and then bring it all together. And I'm obviously thinking a little bit about sort of banking industry and that sort of stuff. There is an element of sort of privacy and enhancement. I don't know, Karan, do you think there's kind of a nervousness to start opening up those data sets just because you might inadvertently open up something that you didn't want to, and that was perhaps why things weren't shared quicker?
And I think that still exists, right? So it's the same sort of nervousness that organizations had migrating to cloud. It's just, where is it going? I don't know. I don't have control. I can't touch it. I can't feel it. I don't know where it's going, and I'm nervous about it, right? So while the industry is shifting a lot faster than they were 2 years ago on the topic of cloud computing, because it's becoming a necessity, on the data and data sharing side, I think we're like 0.5 out of 10. Right, so I'll give you an example on data sharing. All of General Motors cars, they're sharing all their data with Google because the car's already got a GPS, and Google's providing all the information of all the shops that are coming up in the next quarter mile, right? Oh. So they're sharing that data freely. Then you take it to the financial service industry and you take out the PII, personally identifiable information. We're still very hesitant as an industry to share that information, but the use cases are enormous, right? Especially when you start looking at, I know you mentioned fraud, and I'm sure we'll come to that later, but you know, fraud, cybercrime, cybersecurity. So you can go on like non-competitive type use cases, and I think like that's where the industry would probably jump at it first. And if you want to talk more about it, I can go about now.
Yeah, I mean, I think it's kind of like, maybe ask Rupert sort of chime in there for the same sort of reason. There is obviously, you know, as in the same way we're saying good and bad types of data, there's also very private data that you want to protect about your consumers, and then there's obviously other data within that you can want to share. But how does an organization go about deciding what they will and won't share?
Yeah, I think in regulations definitely kind of take a first and overarching perspective on it. So I think what has happened with the current COVID environment is even with governments kind of tinkering around these lines of privacy. I think this concept of your data is not just you, we'll anonymize your data and then use it. So I think there is that awareness that also needs to come for the industry to move forward on it, that how this data will be used. I think we need to be more open about that things to get the confidence of the customers, because financial data, insurance data, this is something. I think one of the thing with the exception is that, you know, if I share it, I probably will not be insured. So that could be one of the reason why you know, individuals would not be comfortable sharing it, because they are kind of, I'll be uninsured, or I'll not be able to open a bank account or get something as an financial instrument. So I think that it's something that needs to be led by the industry, but I think that we need to get that customer confidence that it's not to you know, filter out people, but to actually be able to identify what's right for you, and we are able to give you a customized solution to your problem. So I think that we kind of need to have the discussions on those landscape, in my view.
Interesting. Adrian, maybe coming to you from obviously your perspective, and obviously, you know, GoBear has brought a lot of data together to do what it does at the moment. How much more and how much more personalized could it be if you had more access to sort of individual user data?
Well, I guess, I mean, so I think our access to individual data is driven a lot by regulators. So I think a big part of industry responsibilities is to help educate regulators, because it's very fast moving, and what we're seeing in the application of data and what problems we can solve continues to evolve quickly. So I think regulatory sort of education and helping regulators understand what we can use this for is a big part of it. but we can already get in most regions some form of individual data with consent, right? And how we use that with consent is the key. And I think if we take individual data sets, when I ran JobsDB, we always have to prove to the consumer what is the value for them to take that next step to provide the data. You know, why should I provide you my income level for the job search I'm looking for? Why should I give you my name or industry? And so as a tech company, it's always about what we call putting the case to the consumer why they should get the information. So if I'm going to give you this information, and some places are easier than others. So if you're in the Philippines or Vietnam and you just have no access to credit, then if you can understand that by giving this access, you are more likely to get a loan, for example, then people will be willing to give it. Because in those markets, there is no credit bureau that covers the majority of the population. And therefore, if you don't have a credit card, you'll be rejected out of hand. So, I mean, I think it's about making the case to the consumer about what is this information actually going to be used for to help you, right? If we can't make that case in any tech business, then they won't give it to you. So I think that's also part of it. There's the regulatory aspect, and there's also, hey, what is the information you're going to use, and what's in it for me as a consumer to agree to give that to you?
Yeah, interesting.
Just to add one small point. So what Adrian's talking about is the business proposition, and that which you put the business model on the back of, right? From a regulation perspective, you've got the open banking regulation that's been going quite strong in UK and in Australia. I can speak to those two. But you also see the transition to open finance now, right? Which is no longer just the banking data. It's looking at telephone data, your telephone accounts, your gas accounts, and whatever. I think that if you look at regulation, so that from a regulator's perspective, I think that's a big shift in how our customers will interact. Now again, I'm in B2B business, I'm not B2C, but even just looking at B2C, that's going to be a huge shift. But just to also add, you've got things like GDPR and customer data rights. They have a huge impact. So I think if you look at those two kind of regulations and then find the proposition in the middle, I think that's where the trends are.
Say, I guess Rupa, in the sort of regulated area that you sort of in as well. Don't know if you wanted to comment and sort of against that as well.
Yeah, no, I think that's kind of pretty much where we are as well. One of the other interesting trend I can say in that space that's happening is that if you look at blockchain as one of the technologies where I think the industry as a whole is coming. So insurers are trying to come in together rather than just one organization on its own is to share the data. So for example, a blockchain to authenticate the accidents that can happen, right? So that I think those kind of solutions are an alternate way to just, rather than going to an individual saying, give me your data, and then you have to kind of justify the whole case, which Adrian was rightly pointing, right? What's in for the customer. The alternate way to that data is also to use, how do we use technology and more use it from an industry point of view, and then come up with case studies which would benefit everyone collectively. So it's more of a win-win using technology and data. So I think that is also a way which I think will happen a lot more, and will have a lot more case studies as we pivot into, and 5G comes into picture as well soon.
Yeah, I think obviously with 5G and then much more data sharing and the ability to send much more data in a much shorter time, a lot of people are saying that's going to herald the whole concept that we see in sci-fi films that Karen was alluding to. You walk down the road and every single electric display starts saying you want a hot dog, or this is what you want, because it's realized you're hungry in some way. And sort of stuff. I'm a good sci-fi fan, so I always do like that sort of stuff. But sort of Adrian, sort of coming back to you, sort of thinking about sort of where we are now with sort of data. What do you think is the sort of the key to the explosion of sort of the comparison sites? What's the sort of the main trigger that brought all these sort of businesses into being?
Well, I guess, look, in Southeast Asia and Hong Kong, where we operate, generally speaking, financial product penetration is still quite low, right? And so I guess financial services businesses coming into the region brought into this market is because we see that financial product penetration is low, and there's an opportunity to improve people's lives and financial health by bringing them into the formal financial system. I guess none of this is new. People have been talking about low credit card and low credit penetration in Indonesia for 20, 30 years. I think what is new is the reason we're having this webinar is it's technology and data. It's the cloud computing that Karan and Rupa mentioned. Like 10 years ago, you know, when I ran DropsDB, the coolest thing was when you type in account and you use natural language processing, say, is that accountant job or is that account management, which is sales? And we're like, wow, we're so like advanced, right? I mean, so we've had machine learning and things that we thought were advanced then. Now you can just buy off the shelf, and you know, you don't need any developers, you don't need any data scientists. So I think what's changed now is the market potential to change people's lives and improve their financial health is there. We now have the technology, data, and frankly, all the computing power to now run big data sets and change. And this is kind of like a virtuous cycle, because smartphones are now more powerful than my old computer, then people are on it more. And when they're on it more, there's new behavior, there's new data. And the more data they have, then there's more things for people to analyze. Data scientist as a term in the jobs world didn't exist in the start of this decade, right? So this is just an example of why data and technology has an impact in financial services in this region. And that's why many businesses now are coming up.
Okay, interesting. So we're going to move the conversation on into the future and thinking into the future. We had a question in for Karan saying you brought up the point about data sharing and helping into open finance. It's almost like a prediction for new business ideas, but they're kind of saying, what do you think the new business model in fintech's going to be with this availability of new data? You know, how do you think the sort of the fintech companies are going to change and adapt, or even new ones come along with access to new data?
That's a really good question, and one I have to think about. But I think the initial gut feel is, and this is how I've been thinking about the, you know, I'm starting to refer this to as a new tech industry rather than the fintech industry, because anyone who's got financial service product and got a bunch of technology, it's a fintech, right? And it's like, we all know it's way overused, like the word innovation. But in terms of like the new tech, I think it's more, it's about your new value proposition. So I think the fintech business models are going to change every 2 years and not deviate 5%, but they'll probably deviate at the rate of 20% every 2 years, 3 years. Because every time you've got new, just staying on topic, every time you've got new data sets and new technology, you can do so much more with it, right? So to Adrian's example, back then you would have hired 4 or 5 people to work out, is it accountant, now it's off the shelf. Now you need to find people who can actually analyze their behavior, right? You can find people who can actually dig deeper into the data, look for patterns. So I think that the job market is also changing in terms of how we look at that. So I mean, the real point there is, I see the model shifting every 2 to 3 years. The current outlook that I have into the industry is all around, I think, how can you use data, and it sounds a bit obvious, how do you use the data that you have available with the technology that you have available to find that proposition and actually put that proposition to the customer? If it's a B2C fintech or a business, what's the proposition, right? If it's, you know, so if you look at open banking, without, you know, giving anyone free marketing here, a lot of open banking apps there, the only proposition there is they pull different bank accounts and put analytics on it. Both capabilities very much available for 10 years, right? So that's the point. So I think now as the dial starts shifting, that you can do a lot more with data. You can start piecing different data sets together. So wherever you can jump, so in the trading world, we have this term called alpha, which is like your insights into, you know, your trading insights. So I think it's what's the alpha for the customer proposition, and I think that's what wins.
Okay, interesting. I hope, Rupa, you've been thinking hard about this as well, because I think it's only fair to put you on the spot and ask you the same question about the insurance industry.
Yeah.
How do you think the sort of, and Adrian, I'm going to come to you in a minute, so you need to start thinking about that as well.
Oh, you can get some more time for you.
Yeah, so kind of thinking about sort of obviously thinking of open finance and open data, and how would that, do you think, change and affect business models for insurance into the future?
Yeah, I mean, it's a very broad topic, right? I mean, data cuts across different things, be it on how we are selling to the customer, how we are engaging, retaining them, to how we are servicing them on claim side, right? I'll probably take two areas where I think broadly from insurance, where I think a shift. One, at the corporate level, I think there'll be more and more IoT of devices, right? And what that means is that, just taking a very simple example, like even the railroads or the transport that you have, they all have now looking into, Korea, Singapore are looking into getting IoT devices there. So what that means is that there's a real-time information on the wear and tear of those machinery, right? And that just means more automatic insurance coverage, as well as around pricing as well, much more information. So I'd say the corporate world, really, on the corporate side, be it cyber or be it on these kind of coverages, that data will really improve how these risks are priced and serviced. When it comes to consumer, which is interesting, I think with so much data that's happening and getting generated, there's also a point of customer fatigue. Now it's the same customer, same data, and the use cases are so many. So financial institutions are one, and you have e-commerce, etc. I think where the future for insurance on consumer side, to me, is that insurance need to become invisible in some sense in near future. So the customer doesn't have to have another proposition to sell it. It's so much part and parcel of their life that it doesn't disrupt, because I think because of the fact of everyone wants the attention. So I think if we are able to move in a direction where it's invisible, that to me is the consumer insurance future. I don't know if that happens, but I think that probably has some legs to it.
Yeah, it's all sort of crystal ball, sort of staring into the future and seeing what might be. I guess, Adrian, asking you the same question is almost like saying, well, where's GoBear going to be in 3 or 4 years' time? Because you are this fintech, insurtech company that will, I'm guessing, pivot and change as and when required, depending on the data and the market you have available.
I guess for us, because I mean, we see ourselves as a financial service and data platform. And I mean, we started off as really just the front end acquisition part of the value chain. But I think that doesn't add enough value, because, you know, the next part, which is the assessing pricing risk and providing the financial product, that end-to-end process, that whole value chain is more valuable if we have data to share. So I think I wouldn't say it's a change, but an acceleration of what we currently do is to have, I guess, strategic partnerships like we do with Chubb. So another plug for the GoBear Chubb strategic partnership.
Is you guys partners?
I was going to say, Ryan's feeling left out now.
It's really trying to find partners who can use data in the same way. I mean, a lot of us say that we want to use data, but the ability to do it quickly, have it on hand. There's a lot of things that go into making sure the infrastructure is there in terms of the data warehouse, the pipelines, the way we think about it. And it's more than just tech. It's also our own legal and compliance groups. You know, it's like the DNA of the organization, because for the same law, GDPR or PDPA in Singapore, or the privacy ordinance in Hong Kong, for the same regulation, you can go to 20 different financial institutions, and their own in-house legal will have a different view of what can be done and what cannot be done. So for us to be finding partners with a like mind who will try and solve this problem together, because no one has all of the data, but collectively we can make things more efficient and better for the consumer and the partner, and therefore the industry, if we can actually work out how to use the data together quickly. Yeah.
Interesting, yeah.
Real time, right.
Mark.
Yeah.
Sorry, just going to extend. Rupa had a really good point around lifestyle, and I just wanted to extend that, right? So I think finance is such an exciting topic, and I say that with sarcasm. That every one of our customers jump at it, whereas I think where the industry is going is wanting to make it more of a lifestyle app, right? If you look at some of the travel prepaid companies that have started in the last couple of years, now they're offering foreign exchange, which cuts into my business, are offering insurance, which cuts into Rupert's business, right? So so there's a huge model shift, and I think to the earlier question around where the fintechs are, where the models are, I think it's more about the lifestyle. So embedding the product as part of customers' day-to-day routine. So if I leave work late, I get a message, hey, I see you left late. Should I order your favorite pizza? And it'll be there by the time you get there. No, today, that's actually quite possible, right? With open banking and the geotagging, that's quite possible. So I just wanted to add that point. That was a good point.
Interesting. While we're sort of talking, you mentioned a really interesting word to me previously called synthetic data. And without sort of going into War and Peace, what does that actually mean? I've never heard that concept before. And is that some futuristic version of data that we sort of just create ourselves?
Yeah, I was going to ask your audience to brace themselves, right? So synthetic data is the mock version in layman terms of real data. So you take real data that Rupa and organizations have, and you put it through a synthetic processor. What happens is at the end of the day, you can't identify the PI, but the statistical value of the data remains. So there's two ways you can get there. You can either take an organization's data and put it through the grinding machine. Now, no organization yet, frankly speaking, that I've come across feels comfortable with that, because unless it's your own product, you're like, I'm not sure how good that is, right? But that is certainly a thing. That's a trend that's happening in the market. And the use cases are, you can then partner with fintechs, with machine learning companies a lot more easily, because you go, okay, here's a synthetic version. You will never know nothing about my customer, but can you tell me what you see? Here's a data set, for argument's sake. The second way you get to synthetic data is you create a whole lot of garbage data, you clean it up, and you apply the statistical values to that data. Now that's a much more comfortable way that people go down. But yeah, I mean, look, as I should have said this earlier, but all of these are my own views, not Westpac views, and doesn't represent any of Westpac's business interests. But synthetic data and data sharing is something that I quite enjoy, getting into personally. Yeah. I think it's a fascinating space.
It's an interesting concept, you say, because everything we're moving to is going to be trying to be based more and more on a persona creation of and how that persona then reacts. If you can't get data about a persona, it kind of limits your ability to build anything around it, doesn't it? So synthetic data is kind of a way of actually making something as real life as possible, but actually not being connectable to Mark Walker in that respect. Yeah.
Okay, look at it as a different way of anonymization, right? So when you do anonymization, it goes into Google and you can't make any sense. So for an application that you got to see the data, it's no good. So that's the good memory.
Cool. We're kind of coming towards the end sort of thing. So I just kind of think, without sort of like going into too much depth, I want to just touch a little bit on sort of the data biased sort of concept. Maybe for the last sort of 5 minutes. I was going to say, and it's laughable that we can maybe do that in 5 minutes, but the rest of the conversation has been really interesting. The kind of the concept of, maybe it's kind of part of the sort of like the closing side of the things. What's the risks of utilizing our own data and historic data to map into the future? And that's probably a nicer way of sort of explaining it. I was going to come to Rupa first. So the idea of, okay, we've got a lot of historical data. How relevant is that to the modern world and the way that we interact and the way people interact?
Yeah, I think it's a classical issue with the industry is that it's not much reliable for the fact that, especially if you're looking into future products and innovation around it, right? Digital is one example. I think most of the industry started off in that trend. just putting the same old products on a digital channel, assuming people will actually buy it. No, it happened, people did not. And the reason was that it didn't resonate with them. And it was all based on, as Adrian was previously quoting the example on the flight delay limit, right, is a classic example. It would have just been based on the historical data that insurer would have had in isolation without looking at some of the other details. So I think while that data is still very relevant, what we need for the newer product innovation to come in, we need additional data points at this stage. And also, as what we were saying, filtering the right data into and actually producing products that will actually resonate. So to me, that the earlier data points are still applicable from an actuarial point of view of what we use for claims. It doesn't mean we don't use them, but we are at a point where we need to really enhance those data sets for us to be more faster and efficient. If you are doing usage-based products, you cannot rely on your existing data because you don't have any pattern about your customer, right? So if I want to do a switch on and off kind of a product, or something to say that, hey, as a customer, right now I'm doing work from home, and if I get injured, is this a personal injury, or is this under my office injury? You do not have all that data. You cannot just rely on your existing data points. So without demeaning what data you have, which is still very relevant, I think we need those new data points just to marry with where the consumers are going.
Okay, yeah, interesting. Adrian, I don't know if you want to sort of comment on that as well, sort of the risk of data bias and where it might be going.
Yeah, I guess, I guess the way a lot of the data models work, there's a regular process of seeing how accurate the predictions are, I guess. If you just talk about behavioral data on a website, can I predict how many people open this email or click and so on? So we would always have, I guess, a regular process to see, if it's still predictive, right? And that's part of a product manager's role in a tech company. If you think about financial services specifically, about, hey, will risk models change, or will there be implicit bias in your risk models depending on the data you capture? And I think that's a broader discussion about, AI, and is the starting point already biased, and therefore we take into account these factors? I think if you look at the nature, though, of data that we're using these days, let's call it big data or big data sense, a lot of it isn't around the traditional scorecards of demographic, age, etc., which is typically the factors that lead to bias. A lot of it literally is around behavior. It could be what sort of apps you have and how often do you use them. It could be how like the number of contents or the size of your email box. There's a whole bunch of other data which is completely unstructured and wouldn't really fit into the typical bias that we would worry about today. So if you look at the models, the algorithms that are used to predict risk, oftentimes they have nothing to do with traditional demographic factors, which are the factors that lead to bias. So in some ways, there is the potential for, let's call it, large data sets to actually improve bias, right? Or eliminate bias, because they're not actually based on the traditional demographic factors.
Okay, interesting. Yeah, interesting concept. Karan, similar sort of experience from yourself?
That topic really confuses me, right? So I'm just going to be upfront about it, because there's a lot of talk about data bias, but data bias to me, it only applies when there was previously human decisioning involved, because it was a single set of policies that the data was being made and you automated that and you put machine learning on it. There shouldn't be any bias, arguably speaking. But if there was a human involved in making a credit decision, and if that's where the bias comes in, because now you're programming your bot on the basis of that bias, right? Or he's learning himself, it is learning on itself based on that bias. The other thing is, if you go, in my head, I have this, behavioral economics. So if you went to era before pre-iPhone versus post-iPhone, or in the last 2-3 years, if your model is learning off the early 90s and the customer segment is still the same, it's going to be totally inaccurate. So the bias is not always related to the humans involved in decision making, it's also how the time has traveled, and the behavior is changing a lot more frequently now, as the society and the technology enabling it is. So it's one of those deep thinking topics for me.
Yeah, not for the last 3 minutes of a webinar.
No, no.
Maybe the next webinar. The next webinar is data biased. We're kind of running out of time, so what I was actually going to do is really just go to each of the panelists and maybe get some sort of final thoughts from you. Just sort of a bit of a summary, if you like, of you know, where we've been, where you started, where we're going. Nothing too War and Peace or too in depth, but just a chance to sort of say a final sort of few thoughts, and maybe put Rupa on the spot for the starting that off.
Yes, you're after me, Mark, today. No, I think, first of all, I think it has been a wonderful exchange of thoughts here, and I think it just showed the how much you can still, and I'm sure Adrian and Karan will agree that we can probably speak hours and hours on this topic, right? I think the depth of how much data impacts us, and I think it's data and technology together that has just brought that landscape shift. And I think we are at the starting point of this journey. So far, what has happened, I think, especially on the insurance side, I still think we are at a very early stage, and there is a lot of innovation that will come very quickly in the next 5 to 10 years. I think we'll be talking very different things. That's kind of my view on that data is, and yeah, hopefully we'll be beyond this basic discussion around limited factors, and yeah, looking forward to what's next for us as an industry, and then ensure that we are ahead of it in the curve.
Lovely, thank you. Karan, your final thoughts?
Mine would be, if you're in the industry or if you're looking to get into anything to do with data and technology, my tip would be, whatever you make sure it pivots really, really quickly, because it's such a fast moving industry. If you've got an infrastructure or product that can't pivot every 6 to 12 months, that would be, you know, or if it can, that would be a really good advantage.
Wonderful. And Adrian?
Well, I think it's an exciting space to be in. Echoing what Karan and Rupa said, it's moving so fast, the possibilities are endless, and extra computing power, extra data sets, changing consumer behavior. These are all great things to keep us interested to solve big problems in a big way. So I'm excited about the future, and I can't predict what it'll be in the next 5 years, because I imagine it'll be completely different and will blow us away.
Yeah, it was really interesting. So I just want to say thank you to our audience for attending. Thank you very much. Got through a few of the questions. If you wanted to carry on the conversation, as we said, if you can follow us at the FinTech Times on Twitter, use the hashtag FinTech Times Data is New Air, and we can hopefully carry on the conversation. Thank you so much to my three panelists, Adrian, Karan, and to Rupa for joining us and giving up your precious time and sharing your valuable insights. It's been a real pleasure spending time with you all.
Pleasure. It was a good chat.